True or false? Monetary policy is the only thing that drives trends in Forex markets.
To a greater extent, yes, it's monetary policy, but it's not the only one.
Divergence, and what is it? What does it mean when we say central banks are divergent from each other?
This rate differential is one of the biggest movers in the Forex market.
What do you think are some of the reasons behind the Fed having relatively high rates and Bank of Japan having relatively low?
Historically, Japanese inflation was somewhat under control, whereas in the States, it's more of a free market.
And what would you say is maybe the most interesting divergence? What would you say is a divergence that has actually impacted your trading in a direct way? Hello and welcome back to Trading Talks. In this episode, which is part of our series on monetary policy specifically, we're going to be looking at divergence between central banks and how that can affect us as traders. Last time, we discussed the psychology of higher for longer. Here in this video, we're going to be looking a bit about what divergence is, how it drives trends and volatility, looking at a couple of examples, and considering also other factors that can influence or decrease the influence of divergence as well. If you haven't done so already, please subscribe, turn on notifications so that you're always aware immediately when the next podcast in the series is released. I'm Michael Stark, Financial Content Leader, and joining me to give his insights is Antreas Themistokleous, Trading Content Specialist. Welcome, Andreas.
Hello, Michael.
So let's start from the beginning. As usual, divergence. What is it? What does it mean when we say central banks are divergent from each other?
Yeah, so it's basically the difference between central banks. For example, now the Fed is holding its rates. But on the other hand, you have ECB or the Bank of England cutting rates. So you have a divergence, a difference in the two policies of the central banks. So yeah, that's essentially what a divergence is.
Mm-hmm. True or false? Monetary policy is the only thing that drives trends in Forex markets.
False.
Good. Okay, nice. Why? Why is it false?
Because it's not the only thing moving Forex markets. We have more than one event happening around the world right now. We also have other piece of data like inflation or job reports or GDP that also affect Forex pairs. Mm-hmm. But to a greater extent, yes, it's monetary policy, but it's not the only one.
Mm-hmm. Yeah, no, I mean, it's not a trick question. It's just, I'm just thinking back to when I first started to trade Forex fairly actively, then people were almost completely apathetic about anything that's not monetary policy, pretty much. And things like GDP and inflation were studied almost exclusively for their impact on monetary policy.
Yeah.
So that's why I think it's good to have a broad range, because even though trends are kind of the exception within Forex markets, then it's good to understand all the different factors that affect it. And as we discussed in a previous episode about euro-dollar, it should probably be lower if it was just about monetary policy alone and nothing else.
Yeah, on the other hand, this rate differential is one of the biggest movers in the Forex market. So I get why many people are solely focused on monetary policy because it creates big moves, but other pieces of data also create moves. Maybe not to that extent, but they do.
And certainly it depends on the overall sentiment in markets as well, because if, like, let's say right now you've got a pretty big divergence in policy between the Fed and the Bank of Japan, which we'll come back to a bit more about how that affects the chart later. And that has a kind of variable impact because also the yen is more of a haven than the dollar is.
Yeah,
within that specific pair. And you have right now tariffs, you have ongoing trade wars with degrees of severity, geopolitical, war and all this sort of stuff. These are all factors we need to consider together.
Yeah, when it comes to dollar yen, the current trade operations are getting more attractive, especially when you have this big divergence in interest rates, because carry trade to its core is borrowing one currency to invest in another. So when you have interest rates favoring those conditions, it becomes more attractive and more people getting involved into carry trade.
Mm-hmm. And if you want to learn more about that, if you want to learn more about how you can trade the divergence between central banks, I encourage you to check out the article on Exness Insights, which is linked in the description below. and that'll give you a lot more details about this topic. So how does this, when we're talking about divergence now, one of the main ones that we're looking at, or that I'm looking at anyway, is the Fed and the Bank of Japan. I mean, you could also look at Bank of England and Bank of Japan too, but primarily Fed and Bank of Japan. So, I mean, how does that develop? What do you think are some of the reasons behind the Fed having relatively high rates and Bank of Japan having relatively low?
Yeah, we're talking about two different economies. Historically, Japanese inflation was somewhat under control. We had the yield curve control in Japan, whereas in the States, it's more of a free market. So we have regular intervention by the Fed to correct inflation, especially when it gets out of hand. So traditionally, the Bank of Japan is more reluctant to hike rates. But then on the other hand, we have aggressive hikes by the Fed through right after the COVID crisis, if you want to call that. So you get these big divergences because currently we have the interest rates in the States is 4.5 currently, and in Japan it's 0.5. So you get 4% differential, which sparks carry trade.
And the nature of the economy also is quite different. I mean, one of the reasons why the Bank of Japan is okay with a moderately weak yen is not unknown for Japan to post a trade surplus. If you look at the monthly trade data, I mean, okay, it certainly doesn't do it every month, but it's not totally unknown if you look at the last several years for there to be a trade surplus in Japan. Whereas for the USA, that's completely inconceivable. There's no way in the near future, anyway, they're ever going to post a trade.
Japan is like their exports being competitive.
Yes. So that's, I think, a very important factor. Okay, and I think what we can do also based on what we were saying before, and we'll seem to be running with this example, let's look at the chart. Let's look at the chart, I think, of dollar yen.
Yep.
And I think maybe if we take a daily chart, and what I would perhaps highlight specifically is the situations where we still have this high differential, but it's not really doing anything, in inverted commas. It's not really moving in this strong trend. And let's look at why, from technical reasons and from other reasons.
Yeah, sure. So on the chart, we see the peak, if you wish, the medium-term high being in early January of 2025.
Yeah.
And based on what we mentioned about carry trade, it should be, the image should be a little bit different. But currently, we see a sideways movement since late May, mainly between the 142.5 and around 146. So that's the lower and upper boundary of this sideways movement, which unless we see any major events coming from the States or Japan, for example, Japan hiking the rates, which is highly unlikely currently, but it's still a possibility. Then I don't see any major moves or trends forming in the near short term, at least.
And what would you say is maybe the most interesting divergence, whether it's a historical one or a present one? I mean, what would you say is a divergence that has actually impacted your trading in a direct way, if there is one?
Apart from the USD and Japanese yen, which is the most common one, I want to say EURUSD, because we have the Fed's holding for longer while the ECB is cutting rates. But you would expect that a rally will be going on for as long as this situation between the two central banks is going on. But that's just not the case. We have big bearish corrections happening. So it's quite interesting. You might get some interesting trading positions or entry points on EURUSD as well.
Yeah, okay. So thanks very much, Andreas, for joining us, for giving us your input.
Thank you very much, Michael.
And thank you also to our viewers for watching. And please, if you haven't done so already, subscribe and turn notifications on so you'll be aware when the next podcast in this series on monetary policy is coming out. And the next and final in this particular series about monetary policy is going to be about live trading of statements and press conferences of central banks, which is a very important topic for many scalpers and traders.